Hey traders, this is Christian from Hertz Tribeca Trade Group, and this is your end of day recap for Wednesday, and it's a little bit on the later side. I apologize for the later video, but my nephew was playing. He's a freshman and is playing in his first soccer playoff game, so tough to kind of really shoot a video while that game was going on. Nice to see that these college games are now on the internet, so you don't even, while I would have liked to attend it in person, just couldn't do it because it was a 4 o'clock game. But in any event, really nice to see it on the internet. So in any event, let me just do a quick video, end of day video, and I shot a midday video. Really, I don't have a ton of things to add from that midday video. I wanted to see how the end of day was going to go. We gave back some profits, which I can go through. I'll bring up the daily chart in just a second in S&P. But, really, I have to say that the value areas really give us good levels to trade off of and to be disciplined on. So, we pointed this out earlier, and it was actually brought to me by a member. I don't want to say his name because I didn't ask for permission, but really nice top of value for the 1 hour bar was basically where we went for the S&P, and I think that's just what we're going to have to deal with currently, is just to kind of look at some levels. I think it's going to be difficult to think that we can go all the way back here. But I think some names are definitely starting to put in some bottoms, and we're starting to see some momentum come back to the market a little bit, but very selective, right? Very, very selective. But some things against support have done pretty decently. So here's where we are in S&P. Yes, we gave back a lot of the gains. So the good, I'll give you the good in my quick interpretation, is we managed to reclaim the short-term 5-period moving average. Right, that's the first step. Is that you want to see that we reclaim a little bit of the short-term moving averages, and then we can go from there. Could we return back to the lows? Yeah, I mean, it won't take much, but I think you kind of have to take one day at a time. And really be pretty disciplined with keeping your trailing stops on names, some areas that you may have added a little bit of risk to. One of the names that I saw some call buying, and let me just explain this just for 2 seconds with the option flow, because I see so many people always, and I do this probably once every 2 or 3 weeks. I talk about option flow and I badmouth it a little bit, but really it's an idea generator. It's not something that you can, in my opinion, not something that you can hang your hat on, because we see so much of it on a day-to-day basis, and there's a lot of it that's not right, that ends up being wrong. And you have to realize that where that order flow is coming from is institutions, which is a good gauge of whether or not they're buying or not. But a lot of times these institutions are wrong. Just look at hedge fund performance year to date. These guys are not doing well. So it's always an argument that you can kind of mentally think about, is do you really want to be following institutional order flow that a lot of times those particular funds are probably down on the year, and they're not privy to much more information than you or I have, but they're picking spots, and I think that could be useful. So there's definitely some useful things that you could take away from institutional option order flow, but it's definitely not the one all and be all, right? There's a lot of other things that come into play, but it is a good sense of what institutions are doing, because really I do think institutions control the market. The little guy, the retail investor, they're going to pick up on the trend, but they're not really going to move the market. But in any event, we saw basically 2 days of what I think is as SQ square call buying, and for me, I don't know where those guys are going to fall into, the guys who have been buying the square calls, but all I know is you have a really nice support level to trade off, the 200-day moving average, and I can't get too hurt doing that. So I did that right in the close yesterday. I bought this, and it's nice. It was up $5 or 4.60 today. I took off half my position today. Why did I do that? Because it hit resistance and it was not able to get through it. Just like the S&P, you got top of value of 74.41. I think I took half my position off at 74. I said that was basically close enough. So again, we could turn the corner here. Just make sure, and what's nice about all the trading systems nowadays is you could set alerts. As long as you're very methodical and detail oriented, you could set alerts that were basically where you're not really going to move much. You're not going to miss much of a move. So really, I would be looking for this thing to get above value. So I kept half my position. Could I go back into the rest of it? Sure. Also, what I've been doing, because the implied volatility, so I always go back to things that I know right now. The VIX came in pretty hard today, down 9%. If we go to a daily chart in the VIX. But what does this mean? What do we know when the VIX is higher? Option prices are going to be more expensive, right? So this gives you a good, do I want to be necessarily owning a lot of premium right now, directionally? Not necessarily. I think there's a good opportunity to kind of sell against some support levels. And I resort to owning more stock and trading there rather than versus when premiums are much cheaper, right? When the VIX was down, under 15, great, you could play options directionally because it's cheap. But now it's not. It's expensive, right? So above 20, options are a lot more expensive. However, so again, you could take advantage of that. You just want to make sure that you're not doing crazy things with buying, buying outright premium right now. And again, this video is, of course, for information purposes only. But one thing I will say is it gave us a really good signal on Friday. This is something that I tweeted out on Friday, was that we had a divergence between the VIX and the S&P, right? Normally when the S&P goes down, volatility goes up. And Friday, we did not get that, and I thought that was a pretty good signal. And so far, that's worked very well from Friday. The VIX went down on Friday, and the S&P was down over 1%. So that was a really good signal. And those are the things that we can build from, right? So that gave a nice short-term bounce signal. We'll see where it goes. I think this VIX has to fall below the 20-period moving average, right? It's almost the mirror of what's going on in the S&P, right? We haven't regained that much territory in the S&P, just like the VIX hasn't given up too much territory. Let me switch over to IWM. Not the best performance for the small caps today. They finished up only 20 basis points. Again, they don't have to lead every day. They led the last 2 or 3 days. But I would still keep an eye on them, and I would want to see confirmation in the next couple days, such as an MACD crossover. That might help a little bit as well. Same thing with the Qs, which outperformed today very well. I talked about in the midday session video how NASDAQ sentiment, which you can find on the if you Google NASDAQ sentiment, it's the Harmonics website, I believe it is. But in any event, it still finished up 2.3% today, the Qs, so not bad. Not the MACD crossover may be a few days away. We'll see if we could retake the 200-day moving average. Let's go to Dow. Closed right at the 200-day moving average as well, up 1%. So again, it would be nice to finish right on the close. If you want me to come up with a reason why we didn't close on the highs today, it is end of month. Sometimes people are doing a little bit of portfolio adjusting end of month. You may see that again for the first of the month tomorrow. So other than Apple reporting after the close, also look for reallocation of some portfolios on the first of the month trading. A couple other trades that I thought were particularly interesting. Like I said, looking in the 1-hour chart, I think really comes up with some good levels to trade off of, like I showed with the S&P, but also the weekly chart. Take a look at this, ALGN, right? Big move down. So really on the daily chart, you're not going to find too much, areas of support other than that we're pretty oversold here. And what's the RSI on this thing? An 18? I think this thing has a potential to bounce to it personally, and I think you could sell premium. If you look at the November options, they're about a 50%. So would I want to play this in options to the long side? Probably not, unless I was doing a call spread, right, where you can kind of minimize the volatility. What you can do is you could sell a little bit of puts into this value area, right? So that's one trade idea that you can kind of think about, because I think this is pretty washed out. It's an 18 RSI, relative strength index. So you could see it right here, very, very decently sold out. Notice it did get oversold before. It made a lower low here, which is not the best thing, but I think at least it could bounce. A couple of names that I think are going to be interesting that reports tomorrow, ABMD. I didn't really play too much for earnings. I did a couple earnings trades that worked very well yesterday, which was FDN. I went long the FANG ETF. I figured if Facebook actually does okay, the rest of the FANG group could rally. Mission accomplished. That worked really well. The other trade I did was Zen. Not really happy with how this turned out. But again, one of the things that I said going into this earnings quarter is I was going to pay attention to what gets sold off and what gets bought. And right now, what's a pretty decent observation, I think, right now is what's happening with this small cap software space. They're not seeing the carry through that we saw, even though this Zen, right, is all the way down. It decreased from $72 all the way down to 54. It had good earnings, beat on the top line, the bottom line. It also had good guidance, and it was up 2% today. That's not bad, but it did not rip to the upside. So for now, this area has cooled a bit, the application enterprise software group, and it's good to kind of take note of these observations. So really, I've talked about value a lot. We've made some nice money in trades like Walmart. I got out of Walmart yesterday. I think some of these areas are trades. They're not investments. You look for where you want to, what you want to make in some of these trades. I got out of Costco today. Why did I get out of Costco? Because it kind of did what I thought it was going to do. It had a nice rally. Sometimes you're not going to make a double or a triple, but if you can make 40% in 2 days on an option trade, take it. But it rallied right to the top of value right here, and I said that's good enough. Again, 30-40% in 1 day. There's no reason to not take that. If you can make that kind of money in I think 2 days is as much as I had this trade on. Macy's also, which I thought was an interesting chart yesterday, kind of fell apart today. So, another area that I don't want to be in for too long. I'm still looking at value. I still think value could hold up here. Look at Coca-Cola, what Coca-Cola did today. There were some big options that went up. A lot of unwinding of November positions and repositioning, but somebody still has some skin in the game here. And I do like this Coca-Cola chart. I said this last night on Twitter. Sometimes you got to cover up the symbol. I know everybody wants to go back into small cap growth. But if it's not there, if the momentum happens in other places, try to look at this stuff objectively. If Coca-Cola wants to rally hard, the one thing that's really nice about this is the options are so much cheaper than a high growth small cap company name. So I talked about Square already. Another name which I'm kicking myself over, but that's okay. I went through the process. I sent a real nice setup on Twitter on Goose. Really nice move here in Goose from the 200-day moving average coming in clutch. Nice MACD crossover. This thing bounced from $46 to 54. Could I get into it now? Perhaps, but I decided that, hey, if I didn't catch it right away, I wasn't going to chase. And I stick to that. I don't think you can chase in this market right now. I think you want to be very very stealthy. Scope out some trades, and then basically if you missed it, you missed it. One trade that I put on yesterday was AMD, where a lot of things gave back gains towards the end of the day. This did not. Up almost 6% today, and you got the 200-day moving average sitting right there. So I feel comforted taking a shot where I've got really solid support that people usually defend. And I did that with AMD. I took 2 targets in this trade today. All right, so I'll leave it there. Again, we don't have to figure out this market, every day. Give it some time, let it breathe, and let the trades come to you. And really, the last 2 weeks, been finding some nice winners. My winning percentage has been really good the last 2 weeks. And keep in mind, you've had a really big drawdown at this point. I don't see any point in being really negative here. Do I want to, get over the tips of my skis and go crazy into risk? No. But I think if you start to pick apart certain names, you're going to find that there's some really nice charts. And again, you don't necessarily have to feel rushed to get into some things. You can kind of wait and kind of let the dust settle and see where those buyers start to come in. And option activity does give us a real good feel for that. All right, so that's today's video. Have a great night. See you tomorrow.